it's another huge week in the markets. We got the FOMC, we got jobs reports, we got big tech earnings. What more could you ask for? We're going to dive into all of that and more. Maybe talk a little bit banking crisis. Who knows? Who knows what we got time for? So let's get going. Before that, hit the like button, subscribe to our channel. Nothing Kevin or I say is financial advice. We are not financial advisors. We're a couple of guys who love following the markets, looking at the macro, looking at the trends, trying to figure out, what the best moves are at the time. So do your own research when it comes to any buying or selling decisions. Kev, we're back to live shows. I love it. The recorded stuff, it's good, but it's just not the same. So I'm happy that we're back, man. How are we feeling as we start off a big week in the markets?
I'm feeling great. I'm glad to be back here, our regular, live showtime. Markets this week, so much to talk about. I mean, you could literally throw a dart anywhere in the financial markets and there's news to be coming out or to be talking about stocks. So I think we should just get into it.
We're back, Mr. House. Yep. There's a lot to talk about. We're seeing the Dow, NASDAQ, S&P once again, very flat. And it's all about the data that's coming out and what the Fed is going to do. As soon as anything happens that could impact that decision, that's what the markets move. But we really didn't have any reports this morning that were market impacting. So let's look at the ones that are going to happen. Tomorrow, we get the JOLTS report. That is going to be the final big piece of data that the Fed gets before they make their final rate hike on Wednesday. So JOLTS report is tomorrow. It's looking at all the job openings. The expectation is 9.6 million job openings. That would be down from 9.9 last month. We'll see what happens there. Like I said, we got the FOMC meeting tomorrow and Wednesday with the rate hike decision coming Wednesday and Jay Powell's presser 30 minutes after that. We'll get into that momentarily. Then on Friday, we have two big reports. One going to get all the attention. Another one that I think is just as important, but not going to get any attention. So first up, we got the employment report. Expectation is 180,000 jobs added last month. That would be down from the previous month. And then the unemployment rate is expected to be 3.6%. That would be up from 3.5%. So that's what the markets have priced in most likely right now. Any deviation from that will cause movement up or down. And then Friday afternoon, right around when we go live for the Friday show, is going to be the consumer credit report. And that's a really big one. It always flies under the radar. We're going to see the health of the consumer, see what's going on with borrowing. And as we have more of these bank issues, like we saw with First Republic, it's getting a lot tougher to borrow money. Mm-hmm. And I don't think that's going to be changing anytime soon. And if we have another 25 basis point hike, like we're seeing consumer debt at all-time high levels. And we're going to keep going that way because the Fed's going to hike 25 again on Wednesday. They're not going to pivot anytime soon. That debt is going to keep compounding, keep getting bigger and bigger. People are going to lose their jobs. Savings amounts are going down. They're not going to be able to pay their bills, not going to be able to pay their debt. It's not a good setup right now for a lot of people. And it's
shit
really,
on me.
yeah, I don't know how else to say it, but it's not a great setup for the most part. And most people just aren't paying attention to that. If they're involved in crypto, all they're looking at is the meme coins. If they're involved in stocks, they're just keeping an eye on earnings right now. But there's so many other things that are going on that are going to impact the markets in the months ahead that if you can pay attention to this and kind of parse through what matters and what doesn't, you're going to set yourself up for success in the coming year.
Yeah, absolutely. Again, we always say this, the market is not the economy. The economy is not the market. It's completely separate. The market is reactionary to, the greater economy, whether they're pricing things in or they're, absolutely being priced in. This is honestly probably one of the biggest fake outs, I think. Again, I don't think that's necessarily something controversial. I think a lot of people are anticipating some downside, but I also think there's a lot of people and a lot of sentiment that is just absolutely ran by fear and greed right now. Like we were talking about the meme coins. I can go on Twitter this entire weekend without someone bringing up fucking Pepe. I have no interest in this frog coin. I absolutely don't. It's people made a lot of money. Good for you, but it's also are we going to hold on to that? And are we going to get greedy, expecting it to go up because we're in a bull market, or are we going to get absolutely destroyed? It's like that for the stock market as well. I think there's tons of people who, Kathy Wood, for example, buying a shit ton of Tesla when there's a good chance that Tesla could still go down from here. Just because something's down 90% doesn't mean it can't go down another 90%. That's absolutely idiotic and probably a little bit greedy to think that it couldn't. So it's going to be really interesting to see. Again, consumer credit, I don't anticipate this being any lower. I expect this honestly to be a lot higher. I think, and like you said, with borrowing money, it's getting a lot harder, especially with these rate hikes. Who wants to borrow anything at at these interest
Yeah.
rates? It's almost like a stupid play at this point. So it'll be really interesting to see. But if people aren't borrowing money, then obviously people aren't spending money either. So it'll be everything's connected, but we'll see how this plays out.
Yeah, we also got the news this morning to start off the week that JP Morgan taking over First Republic. Originally, that was not, something that was going to be in the cards due to the fact that JP Morgan would be exceeding the amount of deposits that they would be allowed to have. I believe the number is 10%. No single bank can hold more than 10%. They're exceeding it now. I want to say they're holding like $2.9 trillion, which is a lot of money. So that happened. It was a good deal for JP Morgan. They're going to make a lot of money out of this. And, Jamie Dimon out here saying that this is probably going to be an end to the banking crisis. Everything's stable now. We're all good. I mean, that guy, just the lip service from him all the time. Like he speaks out of both sides of his mouth. Like he talks about how bad crypto is, but let's not get it twisted. They're absolutely invested in crypto. They're absolutely building out crypto infrastructure. He's saying that the banking crisis is over. That's certainly not the case. It's, there's still so much that could be boiling under the surface. And we've seen it on the crypto side. It took months after Celsius and all of these other platforms crashed before we saw FTX start to go down. And I don't know if you can hear my kid in the background, but he's agreeing with me. So it's not the end of it. We still have, and this is a conversation we've repeatedly gone over, the commercial real estate issues and how those are going to impact banks. Like it's not a time to rest on your laurels. It's not a time to get comfortable. Like just, batten down the hatches, self-custody as much of your money as you can, and don't trust anyone.
Yeah, absolutely. Question everything at this point. I don't care if it's crypto or traditional financial markets. These people have self-interest. That's the only thing that they are focusing on. Again, when there's blood in the streets, everyone just, clutching their pearls, trying to make as much money as they possibly can and preserve it. They don't really care about you. So you're just going to end up being, a casualty in the greater financial play. And again, that happens from everything from Bear Stearns to anything else that happened in the 2008, financial crisis. And honestly, look at BlockFi and FTX. FTX is now using most likely those customer funds to relaunch the exchange. So again, it's all about them. It's not about you. You have to protect yourself at all costs. And anyone that's saying that this is over is likely full of bullshit. So there's that.
Yeah, I would agree. We also have some earnings this week. Those aren't taking the spotlight, but there are some big ones to keep an eye on. Tuesday, we have AMD and Starbucks. So once again, looking on the semiconductor side, looking at the health of the consumer with Starbucks, that is definitely one where I expect earnings are going to be higher, but it's going to be on the back of elevated costs. Like the prices of Starbucks drinks are absolutely crazy. I've started buying the little Starbucks cold brew pre-made in the grocery store because that is saving me a bunch of money right there. So just one of your options. They're still making money off that. That's great. But, that's what I expect to see from Starbucks. Very interested in the AMD earnings because I'm a big semiconductor holder. NVIDIA is like the top performing stock today. Or one of them. So very happy to see that. And then on Thursday, we have AB InBev, once again, looking at consumer behavior, as well as Apple. That is like the biggest tech. That's the biggest earnings report this week. So big report from Apple. I see some people anticipating it to be not so favorable. That's going to be the day after we get the FOMC. So it's shaping up to be a very volatile back half of the week. I think today and tomorrow are going to continue to be, kind of ho-hum. We've seen it the last few weeks where it's been pretty flat across the board. Might get a little movement off of the JOLTS report tomorrow, but I think the back half of the week could be a lot of fun.
Yeah, I agree. Again, yeah, I think everyone says sell in May or the big sell in May, coming up. We're here now. That's what we saw back in 2008. It seems like everything is just to a point where even if you're looking at crypto, obviously you can see how much money is moving to the exchanges, and we're seeing tons of supply. I think an hour ago, I saw half a billion dollars worth of ETH just dropped on the Binance. So that's fucking encouraging. That just tells me that that people are definitely buying. because this guy's selling the people who are buying, but definitely not going to be something that I'm anticipating to be positive. And again, I expect it to still be when we least expect it. That's when the market's going to move. And, the fact that everyone's expecting this to move off the FOMC, I'm seeing that from traders alike. I don't know. Maybe it happens a little bit before, maybe it happens a little bit after, but you're not going to know when it happens. You're just going to have the rug absolutely swept from underneath you.
Yep. Shout out to Ace, our third co-host here. Absolutely ridiculous to see the Jim Cramer tweets. The guy went on a tweet storm this weekend. I need to go back and look at all the companies he was talking about. He was talking about stuff like Warby Parker and Lululemon and Athletica and Allbirds. And I just want to track what the prices do versus what he was saying, whether it was like sell or hold. And then once again, hit that like button, everybody. But yeah, it's going to continue to be a slow bleed, I think, for a bit. You talked about the sell in May and then go away. I think it's time to start front running that a little bit. I was selling ETH into some of the pumps in April. I think I'm very happy with that move. We're seeing crypto bleed a bit today. We're seeing the VIX. This has been one thing that's been driving me crazy.
I'm going to pull it up.
We see the VIX at 16, and I just don't. It went below 16 over the last like yesterday. That is one where we're seeing the dollar pump again. So you're calling the DXY, but man, this VIX number, people are getting too comfortable right now. Maybe it's because they're not as worried about the volatility. Like I know for some people, maybe they're not as worried about the volatility because they're in cash right now and they can get a strong return on that cash. So maybe they're not as concerned about the volatility, but that number is going to pop at some point, and it's going to pop in a big way. Like historically, we've never seen us exit a bear market without the VIX going into the 40s. And we are so far away from that. So if history repeats itself, which in this case, I think it's going to,
I agree.
Then look out, because those valuations have to come down in a big way.
I'm just going to show this because I was looking at this over the weekend. I was surprised that we're seeing the VIX at, what was the lowest it was? 1553. Nice. Last time it was that low, we saw it was right here, and it shot up to 35 pretty fast. I'm pretty sure that was like November. But again, if we look at how low it's been compared to where it is, obviously we're going to see some spikes following extreme lows. But again, I think us breaking out of this triangle here is a bit of a fake out. I think that this is, if we look at this maybe on the weekly or the monthly, might just be a wick down out of it, and we find support. Yeah, so we got the candle down. I think there's a good chance if we look at the monthly, how oversold it is too. This thing's probably going to shoot up. Again, it's probably going to be when you least expect it, it's going to start making its way up. Maybe it gets back into this 19, 20. And before you know it, we're somewhere like 48, maybe even 60 if it gets really bad fast. But definitely think it's going to be shooting up and breaking out of the upper range here, maybe trading in this triangle pennant for a little bit before it breaks out to the final. I would assume it would be the end of the bear market, but this thing's extremely oversold, undervalued, and we're looking at the S&P, who it's finding tons of resistance at that 41, 42 level. It can only go one of two ways, and I think that it's more likely it's going to go to the north than it is to the south, just based off how low it is at this time. So the VIX, I think, is something that maybe people like to make fun of. It's a broken indicator, but I think it's been a pretty telling indicator when we saw, what was it, Silicon Valley, when that went under. That thing shot up to 30 pretty quick that day. So never know. We'll keep an eye on it, but I think this is ready to take a nice leg up.
Yeah, for sure. Let's take a look at a few of the charts. We don't need to get bogged down in too many of those today. What has been catching your eye there, so we can kind of keep it simple and move through those?
Absolutely. We're going to keep an eye on the DXY. Obviously, we were talking about this. This is the 4-hour chart right now. We can see that we are above this ascending triangle. Obviously, this resistance level is what we've been hitting our head on, hitting our ass on this trend line going here. We're getting close to overbought. We're definitely overbought, I think, on the daily. Yeah, we're in the overbought territory. So I expect us to come down a little bit. But the weird thing is we've been overbought. And when we do come down, we still find support on this. We wicked down here on Wednesday, but we closed up good enough to the point where we've started to find support again. I think that a lot of people are discounting the dollar based on, BRICS. That's the deal between all the countries that are planning not to use the dollar as reserve currency. The yuan, being one of the most traded assets in, I think it was China recently, or in Asia. It's like the most, instead of the US, it's got more dominance, or it's pulling dominance away from the DXY. So we've been seeing, tons of like suppressed price action. However, this thing's still shooting up, man. And we did get that double bottom here. Yeah, one tap, two taps. I think the next move, once we break this blue line, is we're going to start heading our way to 105.69. This was a huge level of support that we were talking about back in, November, right around the time of FTX. And I think this is where we're going to, ultimately find ourselves if we break above this blue level. Probably will consolidate for a few days, maybe a few weeks to the right here. But I do think that eventually we are going to retest this level. And with that comes obviously the price of risk assets coming down. And if it gets really bad, and again, I anticipate it to get really bad, I'm just going to go back to, let's go to 2008 real quick, because we'll see how the dollar shot up in that crisis. And if we go to 2008, this is, here it is. So this is December 2008, so it's towards the end, but right here, this is November of 2008, right? That'd be probably right after September, October, where the market started to crash significantly. We shot up to, 88.476, and then even to the height in March of 2009, where it was the actual bottom at 89. So you can see this thing can move pretty quickly. And if we look where we were prior to that, we were trading somewhere around 71. So that's 18, 19 points that it shot up. And obviously there's a lot more, the dollar has a lot more dominance now, so the value is a lot higher. Wouldn't be surprised if we're at 102 right now. Let's say, 18 points, that brings us to about 120, 122, right around there. So there is a good chance that we could potentially see that wick to the upside. If we're looking on the weekly over a period of time, we've got plenty of room to the upside if we're looking at the stochastic RSI. So who knows? But I do think that this is definitely, it's more likely we're going to go to the upside than we are to the downside based off some of the macro outlook indicators.
Okay. Anything else on that one? I know I'm looking right now. Crypto is taking a bit of a dump. We got ETH approaching 1,800. We got Bitcoin below 28K now. We're
Loving
seeing
it.
BTC dominance pull back a bit. It's about just over 48.
Let's watch that.
A lot happening here in the final hour of trading in the TradFi markets. Everything there is pretty flat, down between 0.12% and even. So not a whole lot going on in TradFi, but crypto is bleeding.
I will say this. Everyone knows how bullish I was on Bitcoin dominance, right? I think everyone saw that I wouldn't give up on this fucking thing. I said that there was one more leg up, and that was right here when it was trading around 40. It was actually at the bottom right here, this blue line. It was at 46.77. That's where I was saying there's still going to be one leg to the upside. This could potentially be, we're going to watch this daily candle and the weekly candle and see how this plays out. This could potentially be the end of Bitcoin dominance, that we could have hit the height and, we just got a triple top. And now if Bitcoin dumps here, obviously this is going to come down and everything's going to come down with it. But there's also the chance that we do have, a bit of a consolidation period. We're going to see how this plays out over the next, few days. I do expect Bitcoin to see some negative price action. We talked about that 25,280 level. So 25,280 being the level that I expect us to hit at some time in the next few months. But looking at this right now, I think Bitcoin dominance actually got rejected pretty hard. We got rejected here, which is also where we got rejected back here in July of 2021. So I anticipate this thing to come down a little bit. If we lose this 46.77, or even if we look on the daily and we lose, this 50 moving average, which is currently at 47.13, I would think it would be most likely might be over for Bitcoin dominance for the time being. Would have to retrace, find this Bitcoin would have to find itself in the market. But we did get a nice leg up from where we were saying that, tons of people were saying we're going to alt season. But as we're seeing the price of Bitcoin, we're down $1,400 on the day since the close. As soon as we entered the new month, Bitcoin just started dumping. We were down like $700. And then right now we're double that. We're at $1,400. So it's going to be really interesting to see how it is. But that shows you how much Bitcoin dominance has over the entire market. What's Ethereum at right now? 1808. So that's down about 3.15% today. VeChain right here is down about 5%. Most alts are probably down somewhere between 5 to 7% if we're looking at that. And we're seeing just some rejection. And if we look at the Bitcoin chart itself, let's just pull up. This is my crazy conspiracy theory chart here.
What is going? I can't even tell what's going on right. I mean, I can't read charts in general. It's not my thing, but especially on that one, Kevin.
Okay. All right, let's go into this one. It's a little bit cleaner. It's I'll have to clean up the USDT pair. This is we're doing BT against the US dollar.
That was
again,
like Kevin's, like, when you go into, when you see it on a TV show, they're trying to catch a serial killer and they got like the yarn connecting 18 pictures. That was what Kevin just had for his Bitcoin chart. That was incredible.
that's me. I'm Charlie Day in that It's Always Sunny episode.
Pepe Sylvia.
Exactly. But I pulled up this one. This may be a little bit easier to see. We're talking about how this supply zone right here, we obviously hit 31,000 to the dot right there, and we got rejected. We bounced off the 50 moving average. We shot up again. I said that we'd probably test 30,000. We did. We got rejected here. So there's a few things that are going on. Obviously, when I look at this, let's see if I can find the pattern that would be helpful. Looking for head and shoulders. There we go. So the one head and shoulders pattern I was looking at was something like this. And then we come down here, and then we get another, test like that. And then obviously head and shoulders means a break from this point here would be negative to the downside. And this is coming in around 20,000. This is the pattern that I was seeing. And I think a lot of people do see this. However, I do think that a lot of people are also looking at a head and shoulders pattern that was potentially right here. So a head and shoulders pattern within a head and shoulders pattern. Pretty nice. Tons of shampoo and conditioner just playing around on the charts. But we're seeing this.
Is that a shot against me not needing shampoo and conditioner?
I don't know. Maybe need some for your beard. It's pretty it's a pretty good beard that you got there.
It's getting bushy. I'm letting it grow. I'm gonna let it keep going.
It might come around on the top. Who knows?
I could nice. If I could get like all the way around, like kind of wrapped it, that'd be a good look. I could try something new there.
Yeah, I mean,
anyway, on to something that actually matters.
All right, so these are the two head and shoulders patterns that I'm seeing. We got a macro one, and then we got one on the lower time frames. Lower time frame one is more on the top of the that we've hit at 31,000 level, so I'll erase that. So I do think that we are going to come down, and again, the one level I think that we are going to find some support around is going to be around 25,280. Again, that would be the top of this left shoulder. Maybe we consolidate there for a little bit before coming down, and then we find another support. Maybe that serves as resistance for the right shoulder. That's what I'm seeing. But again, volumes have been extremely low, except for, we've seen some pretty good move up here. But again, I don't think that there's anyone buying above this 30,000 level. I think that we were seeing tons of market manipulation. I could even pull in on let's pull on the 4 hourly. Yeah, I mean, we're seeing, massive gaps right here, consolidation, another massive gap shooting up, another gap up here. They turn off the buying orders, and then the people start selling, do it again on this side, people start selling, and they've been doing that this entire way up. And it's 100% manipulation. I don't care what anyone says, but I'm looking at this. I don't see this being, I don't see us going further up. I think that we are in a move to the downside, and potentially if we are using Elliott wave theory, where this could go, we could be in a 5-wave impulse move to the downside. So that could be, this was the first leg. Here's the second. Wave 3 would be somewhere down to maybe here. That's 25. Maybe bounce a little bit to this right here. And then we come down to here. And that would finish that head pattern that we were talking about. Very possible. Maybe this 3 has to be a little bit lower. And then maybe 25 is here on the 4. But it'd be something like that. That's what I anticipate the price action doing. But yeah, I do think that this is ahead, and we have to come down on this. And we are at a point where Bitcoin is dropping pretty fast. But again, we're seeing liquidations shooting straight up. Doesn't really give me a lot of confidence that there's stability in this price action. I think it's a lot of emotional trading, and also a lot of people just being liquidated. So it's only a matter of time before the entire rug is really pulled on it. I don't think there's any liquidity coming into the space. I think a lot of it is 100% either manipulation through stable coins or just, again, I'll say this, and I think this is enough, but Binance is playing some fun games over there on their exchange.
We'll get into that more tomorrow. I think that that lends itself to a longer conversation. Kyle, Pepe, listen, I love the memes. So I think if you like Pepe, if you're having fun with it, we see each of these cycles like one meme coin stick around for the long haul. It's been Doge, it's been Shiba. I think the dogs are over there. It's frog season. So I think Pepe could be the one that survives. Is it going to hold up well if the rest of the market tanks? Personally, don't think so. But could it be one that bounces? Sure. People love the memes. And so I don't hate it. One thing I want to talk about, Kev,
Yeah.
is kind of like a growth investment strategy right now. And I want to take crypto out of the equation for the time being. What's the inside scoop on plums? We'll get to that at the end. But, you know, for most people, like we look at these charts and we look at all this stuff, and most people aren't trading, you know, day trading crypto who at least listen to this show, right? Like it's a tough game you're playing there. So what do you think right now from a growth standpoint? I've heard a few different perspectives. Like some people are positioning themselves in that, you know, their strategy is to hold a lot of Berkshire Hathaway right now because they trust the team over there to successfully navigate a recession. Other people are saying they want to hold blue chip stuff like Apple, like Microsoft, like Alphabet. And then still others are saying that, you know, those will probably allow you to, you know, retain some of the money that you've made. However, on the growth side, a lot of those businesses, whether it's Apple, Microsoft, Alphabet, they haven't really innovated much in the last, you know, decade or even 2 decades. So what are you thinking right now from a growth standpoint? You know, if you're a young guy, you're 25, 26, you got a long time horizon from an investing standpoint. Do you feel more comfortable holding one of these big tech blue chips that is going to, you know, be safer, but maybe doesn't have the high upside? Or are you looking at some of these other more up and coming tech companies who are innovating, who do have the potential of being, you know, I'm not going to say they're going to be the next Google or Alphabet or Google or Microsoft, but, you know, how are you positioning yourself right now if you're looking at stocks?
Yeah, I mean, obviously, if I wanted to look at growth, I'm 100% not going to be someone who's going to be looking at these stocks to buy right now, but I would be definitely researching ones that, you know, maybe I'll be able to pick up when the market does bottom or it gets close to a point where it's like, all right, we're down pretty bad. We're close to the COVID lows. You know, this is where I feel comfortable going in because again, you want your money to do the least amount of work as possible. When I look at some of these, I think that the big one right now is AI, and I think it's a dirty bubble for the time being. However, I think it's going to be huge going forward. And again, I think that's going to be huge, especially after this recession, because I think a lot of people's positions, you know, these jobs are no longer going to be available. So I think that, you know, some of this technology could potentially cause some of these companies to do pretty well. Obviously, that's less overhead for them. They don't have to pay out as much, and then they could easily just do the same amount of work going forward and generate if not even more revenue in the, you know, future quarters and future years, decade from now. So I think AI is definitely one that you should be keeping an eye on. For me as well, I also am someone who would probably hedge against that. I would look into privacy. Any, you know, companies that are providing privacy for a lot of people. I think that as AI increases, privacy is probably going to be taking a bit of a leg down. And I think anything that's going to protect your, you know, privacy online, privacy, your identity, anything that protects you, I think is a great idea to be thinking about because again, I think it's so easy to get most of these what's the plan AI though, finding the tech companies utilizing
I just brought that up because that's what I've been kind of trying to play out in my head too, is like reverse engineering, you know, where you think things are going to go and then try to reverse engineer that into, okay, what are the companies that you want to invest in to take advantage of that? So it's an interesting thought experiment right now. I think, you know, for many people, and I'm subscribed to this too, like limit your downside while at the same time continuing to move new capital that you get into high upside plays, right? Like there's nothing wrong with taking a defensive position that also allows you to take advantage of, you know, once in a generation opportunities, because we're going to see those, right? Like there are going to be opportunities here to invest in some companies on the cheap that are going to do some amazing things. Like, is Amazon and Facebook going to have the same potential returns as some of these other up and coming companies? No, but they're just going to be safer bets. So I think it's a really interesting time to reevaluate your portfolio, your positioning, and you know, give us some thought, because I want to be in a position to take advantage of opportunities so that, you know, 10, 15 years down the road, I look back and I'm like, yeah, I kicked the shit out of the market that time, because that's what we're trying to do here.
One of the best stocks that might be, again, it's not financial advice, but when I'm looking at it, I think Tesla's going down to $64. That's what I see in the charts. I don't think Tesla is going to be down at $64 for long. I honestly think Tesla is going to be fine in the years going forward. I think tons of people are going to eventually move over to EV vehicles. And obviously, we're seeing stuff in like California where they're trying to eliminate diesel. They're trying to push for EV. I think it might be a good opportunity to get in at a low entry point. Again, that's not financial advice. If I have some capital on the side, am I going to invest in Tesla? I might. There's a pretty good chance I would. Do I think it's going to go to 2000 like Kathy Wood thinks in 2027? No. But I do think that there's definitely going to be a lot of room for growth, moving forward. I think it's a safe play to think that a lot of these companies that have really good founders and smart teams behind them. And again, you're buying the brand itself. You're not buying the vehicle, right? You buy a Tesla because it's the best EV vehicle. It's the one that's most well known. You're not buying a Rivian because you hate Elon Musk. You're doing it for a specific reason. So I think that, again, brand recognition is always going to be pretty huge going forward, and I think that they're going to be extremely profitable going into 2030. And again, they're slow to release some of their vehicles, but again, when anyone sees a Tesla, everyone wants one. And I think that Elon Musk is not stupid enough to destroy that company. I think that it's just a product of a failing market that's coming. So that's why we're going to see some negative price action for it. But again, I think there's a lot of plays like that where these companies that are probably going to do really well next 10 years going to have some great opportunities. So maybe that's just a play. I'm just a guy that looks for opportunity.
No, I like it. I like it. I think we need to do a deep dive into some of these and kind of look for opportunities, like who's providing, the power sources for there's just so much to think about there. So I think it's a really fascinating one. Real quick, I got the question from Ace, the inside scoop on plums. Okay. This is purely 100% just for fun. A group chat that I'm in on Twitter launched a meme coin. If you've ever seen Eastbound and Down,
Yeah, I've seen a couple episodes. Danny McBride.
Yeah, Danny McBride. Will Ferrell has a character in it, and he talks about how he can feel it deep down in his plums. And so these guys, for fun, launched a coin called Plums. I am not involved in the creation of it. I bought a little bit yesterday with an amount of money that is really not that much. And I'm just having fun. So please do not take any of it as financial advice. I don't know if I'm going to hold it to zero or if I'm going to sell it soon or what. But during this meme coin season, preserve your capital, take profit along the way, and do not be left holding the bag.
Where can I is it Plums on like Uniswap or something?
It's on it's on Dex Tools for sure. You can pull it up on CoinMarketCap. It's not on TradingView, but you can pull it up on CoinMarketCap and take a look at it. It's purely for the vibes. It is just for fun. This is not by any means like, I love how we go from talking about the FOMC and like some serious stuff, and now we're talking about a meme coin called Plums. Like, this is just,
I think
my financial planning professors from college would be so proud right now.
This definitely sounds like a blue chip. I'm very interested in these plums. No,
plums are not blue. They're purple. So it'd be a purple chip.
Oh yeah, dude! I saw so many meme coins pop up in the last few days. Like some just that are just so gross,
so outrageous. Like so outrageous. It's
the worst one I saw. Was Come in Me. I was like, what the fuck is this? But I mean, people were buying it. I'm like, all right, these people need to go.
It's the crypto casino right now. You gotta love it, man.
God bless everyone.
Absolutely, it's absolute madness. It is PvP. Don't take anyone's advice on this stuff. So that's where we're gonna leave it for there. I think we spent too much time talking about meme coins. Riggs, I hope Pepe works out for you, buddy. Ace, let's keep digging into doing some deep dives into EV. I want to talk about this even more. So I think it's gonna wrap it up for today. We'll be back tomorrow. We'll be discussing the JOLTS report. We'll be looking ahead to FOMC Wednesday. We can talk more about the shenanigans going on between Binance and Tron, CZ and Justin Sun, whatever they have brewing under the surface there. I know Kevin is he's like the Hardy Boys when it comes to figuring out what's going on with Binance, but we'll learn more about that tomorrow. See what he'll put his Sherlock Holmes hat on and give us a lowdown on what's going on with BNB.
Yeah, I mean, we did it for FTX, and the same night that we put that video out, they collapsed. So we're just trying to stay ahead of the game in this games and hopefully bring some insight. But definitely excited to talk about that tomorrow. I got nothing else to add, so definitely take care, be careful. Got nothing less.
All right. Love it. So hit that like button if you haven't. Subscribe to our channel. Share us out. We appreciate all of the engagement, all the interaction. Kevin and I love doing this show as always. So we'll be back tomorrow, same time, same place. Appreciate everybody. We will see you next time.
Take care, everyone.